Good afternoon and welcome back to the channel. So I just wanted to put out a quick video because today's news cycle has been crazy. It'll probably get crazier by the end of the day, but I just want to recap really quick. So over the last couple months, when there's been a lot of talks about bear markets and this and that and the other, and we're going down and this and that, Tesla's been adding to their position. KPMG just put Bitcoin and Ethereum on their balance sheet. Sailor's been continuing to buy. Purpose ETF, the largest ETF in the world, continuing to buy. Apparently Russia owns a ton of Bitcoin and cryptocurrency, so that happened. And then Fidelity said they've been buying and mining Bitcoin since 2014. And I'm sure that there's other examples that I just couldn't think of off the top of my head, but those are just the ones I thought of off the top of my head, and two of which came out today. So this is just a continual pattern. We saw it with the crash back in May, all the way down from 64 down to 29. Retail was continually getting flooded while whales were accumulating. We saw this after the first run up in the correction, same exact thing. People called it a dead cat bounce. Whales were accumulating, and now over the last 2 to 3 months, large institutions have been accumulating while retail has been flooded out of the market. Many of retail, okay? Now, the majority of retail just a couple weeks ago said that we were in a bear market. I looked at large polls and it said that we were in a bear market, right? This is, 20,000, 30,000, 50,000 retail people getting polled here calling this a bear market. So in my personal opinion, this is a good lesson for the future. If on-chain looks macro bullish, if we see, it goes back to my only rule for the channel. If we see numerous examples of whale accumulation happening on-chain, and if on-chain still looks macro bullish, if the trend is still trending downward as far as the supply, we're in a bull market. Period. End of story. I said this months and months ago that we would be in a bull market probably for the next 3 to 4 years. Because as long as they're continuing to implement the new tech and it's continually being adopted, I would assume that institutions are going to continue to buy like they have been here recently. So I just want to make that point, and I don't want to come out and just rag on other people, but I mean it's a little bit of vindication in my opinion, because it was a very unpopular position 2 to 3 weeks ago to come out and say, yeah, I'm a Permabull. I'm going to continue to buy. I know a lot of y'all have the same mindset that I do, but I think a lot of people are kind of on the fence. And they're only on the fence because of the amount of lies and things that are pushed out there that get them questioning everything while institutions are buying hand over fist. So, I don't know what else to say. So, Permabull strategy has been vindicated in my personal opinion. And even if it were to pull back, let's just say it were to pull back to 35K right now, that wouldn't bother me at all. Okay, I would actually prefer that happen, because getting cheaper prices while you know that institutions are regularly accumulating is a win-win in my personal opinion. So that's all I have, and I just wanted to put this out. I got a lot of things going on with work, so I'll be a little bit more tied up over the next couple weeks. But yeah, check my community tab. I'll be putting a lot of things in my community tab also. That's all I got. And yeah, the bears look like total clowns at this point in time. So not surprised. Take care. Have a good day. I'll see you next video.